or have another print disability which makes reading, holding a book, or turning a page difficult or impossible. The content is copyrighted by the respective publishers. For more information, please visit us on the web at nfradioreading.org.
Hello, this is Corrine, and for the next hour, I'll be reading from the April 13th, 2026 issue of the Wall Street Journal on the Niagara Frontier Radio Reading Service. Thank you for joining us today. The highlights under business and finance are: earnings season arrived to test the market, just as stock investors were starting to shake off a weeks-long rout induced by the Middle East conflict and surging oil prices. Wrong-way bets on oil early in the Iran war put a trading team hundreds of millions of dollars in the hole before it managed a partial recovery. The local union for thousands of beef processing plant workers in Colorado reached a contract with JBS a week after employees agreed to end a strike. The future of a planned aluminum smelter in Oklahoma will test whether the U.S. can revive its ability to produce materials vital to the economy and national security. A crypto jury that handles poly-market disputes ruled that the mission to rescue a downed airman satisfied the terms of a wager that placed American boots on the ground in Iran. Several major ad firms are negotiating a potential settlement with regulators over whether they violated antitrust laws by coordinating boycotts of platforms. Tucker Carlson is getting his own book imprint from Sky Horse Publishing. A British startup is being pursued by companies in China and the U.S. for a new solar energy technology. After the electric vehicle slump, high gasoline prices are fueling an EV comeback. Now for the key articles under the worldwide section. Trump's announcement that the U.S. military will blockade the Strait of Hormuz sets up a risky new showdown that could draw American forces into a prolonged struggle to control the strategic choke point while compounding the global economic damage caused by the conflict. In its recent attacks, the U.S. destroyed most of Iran's biggest ships, but left largely intact the fleet of small, fast craft Tehran uses to control the Strait of Hormuz. The attacks on Iran failed to deprive it of most of its tools it needs to make a nuclear bomb, experts said. Prime Minister Viktor Orban suffered a landslide defeat in Hungary's election, ending the 16-year rule of a politician who had become a standard bearer for populist right-wing leaders worldwide. Representative Eric Swalwell suspended his campaign for governor of California, as some fellow Democrats called on him to resign over allegations of sexual misconduct. A drone attack near Baghdad's airport narrowly missed a U.S. embassy convoy carrying a released American hostage who later left Iraq. Trump lashed out at Pope Leo for criticizing the Iran war and called the pontiff weak on crime. South Africa's Democratic Alliance Party elected a new leader who defended its coalition with the ANC and outlined plans to lead the next government. The picture on today's front page takes place in front of the Parliament building in Hungary as a group of people are standing before a podium waving the Hungarian flag, which is red, white, and green. And that caption reads, "Flag waving election winner Peter Magyar and his supporters celebrated Sunday in Budapest." The title, Hungarian Voters Reject Orban After 16-Year Rule, by Matthew Luxmore. Budapest. Prime Minister Viktor Orban suffered a landslide defeat in Hungary's election on Sunday, ending the 16-year rule of a politician who had become a standard bearer for populist right-wing leaders worldwide. With 98% of the votes counted, Peter Magyar's opposition party was leading with 54% of the votes, compared with 38% for Orban's party, one of the largest winning margins in Hungary's 37 years since the collapse of communism. What today means for our homeland, we do not know. Time will tell, Orban said in a speech at his campaign headquarters after congratulating Magyar. In any case, we will serve our homeland even in opposition. Magyar, speaking to a crowd of thousands of supporters in Budapest, said he had won a David against Goliath fight and compared the victory to Hungary's 1848 War of Independence and the 1956 uprising against the Soviet-imposed communist state. Together, we replaced the Orban system. Together, we liberated Hungary and took back our country, he said, standing on a stage across the Danube River from the parliament. Those who commit the sin of dividing the nation must leave power. Magyar appealed to Orban not to make any decisions that would tie the hands of his government and said his Tisza party was on course to secure a mandate to pursue a sweeping overhaul, including the prosecution of those who stole from the country. He said Hungary would once again be a strong ally of the European Union. The crowd broke into chants of Europe and Russians go home. Europe's heart is beating stronger in Hungary tonight, European Commission President Ursula von der Leyen said in a post on X. Orban, leader of the Fidesz party, had cultivated ties with powerful nationalist leaders, including President Trump and Russian President Vladimir Putin. Trump endorsed him and sent Vice President J.D. Vance to Budapest to campaign alongside him last week. Orban was often a voice of dissent within the European Union and opposed Europe's support for Ukraine in the war against Russia. This is not just a repudiation of Russian influence, but it's also a repudiation of Trump, said Ian Bremmer, a U.S. political scientist and president of the Eurasia Group, a geopolitical risk firm. Because let's face it, with the exception of their anti-EU position, there's very little reason why Hungary would be strategically interesting for the United States. Years of inflation, underinvestment in healthcare, and falling real wages soured Hungarians' enthusiasm for Orban's rule, according to polls. Hungary last year, for the first time, became the poorest of the EU's 27 member states, according to some indicators. It was also deprived of 17 billion euros, the equivalent of about $20 billion in foreign aid that has been withheld by the EU for what it calls Hungary's democratic backsliding. Other articles from the front page follow. U.S. threat to block Strait sets up clash. High-stakes war of attrition will test whether Iran has higher pain threshold. By Vera Bergengruen, Shelby Holliday, and Georgie Kanchev. President Trump's announcement that the U.S. military will blockade the Strait of Hormuz sets up a risky new showdown that could draw U.S. forces into a prolonged struggle to control the strategic choke point while compounding the global economic damage caused by the conflict. Hours after U.S. peace talks with Iran broke down in Pakistan, Trump said the Navy will begin the blockade, seek and interdict vessels that had paid Iran to get through the strait, and then start clearing the waterway of sea mines. The blockade is set to begin at 10 a.m. Monday Eastern Time, U.S. Central Command said. The move comes after Vice President J.D. Vance ended 21 hours of talks in Islamabad without an agreement, blaming Tehran for refusing U.S. terms on its nuclear program. Oil prices, which had fallen last week amid optimism about a ceasefire, were again trading above $100 a barrel Sunday night, with U.S. crude up almost 9% at 11:30 p.m. Eastern Daylight Time. While the U.S. military has the resources and the capabilities to execute such a blockade, current and former U.S. officials and analysts said sustaining control of the waterway could be far more difficult. It's certainly well within the capacity of the forces that are there to mount a blockade, said Brian Clark, a retired naval officer and senior researcher at the Hudson Institute. Now, if Iran starts shooting at them or shooting at people that are operating these systems, then obviously it gets more difficult. You have to protect them with ships. Volatile phase. The move opens a volatile new phase in the 6-week conflict, shifting from punishing strikes on military targets to an open-ended campaign to police the strait. The prospect of such a blockade could set off a high-stakes battle that tests which side has the higher threshold for pain, Tehran or global markets. Current and former U.S. defense officials also said the blockade would buy the U.S. time to sweep mines and establish a protected passage for commercial shipping, but any renewed Iranian attacks would quickly complicate the mission. The waterway is exposed to Iran's coastline, and any operations there would remain vulnerable to mines, drones, and attack boats. While Trump has repeatedly touted the U.S. military's decimation of Iran's navy, the paramilitary Islamic Revolutionary Guard Corps still maintains much of its extensive fleet of more nimble speedboats it uses to control the strait. This is a militarily manageable effort, said Mark Montgomery, a retired Navy Rear Admiral and senior fellow at the Foundation for the Defense of Democracies. And the operation could be effective even if U.S. forces don't stop every vessel, just enough ships to spook the herd and scare off other shadow fleet operators to turn up the economic pressure on Iran, which is now heavily dependent on those shipments. But I don't think you could do this alone. While Trump said on Sunday that numerous countries would be helping U.S. forces impose the blockade, it is still unclear what such a coalition would look like. Some European and Persian Gulf officials had previously signaled support for a multinational effort to restore free passage through the strait, though some key countries said this would depend on a lasting ceasefire and an international mandate. Iran is betting they can hold out longer than the U.S. and the global economy. You are listening to a reading of articles and features from the Wall Street Journal on the Niagara Frontier Radio Reading Service. Nuclear Program Puts Peace Talks at Risk by Lawrence Norman. Iran survived 5 weeks of punishing U.S. and Israeli bombing with most of the tools it needs to make a nuclear bomb intact, officials and experts said, posing a challenge for U.S. negotiators as the issue bedevils talks with Tehran. Vice President J.D. Vance pointed to Iran's nuclear ambitions on Sunday as the core dispute after the two sides were unable to reach an agreement during 21 hours of talks in Islamabad, Pakistan. The simple fact is that we need to see an affirmative commitment that they will not seek a nuclear weapon and that they will not seek the tools that would enable them to quickly achieve a nuclear weapon, he said. Iran blamed the failure of talks on Washington's refusal to back down from what it described as maximalist demands. The problem for the U.S. is that 2 rounds of fighting have dismantled much of Iran's nuclear program, but they haven't delivered blows that would put a weapon out of reach. U.S. and Israeli strikes in recent weeks destroyed labs and research facilities the two countries say Iran used for its nuclear weapons-related work, such as gaining the knowledge it needs to build a warhead. They also further damaged its enrichment program, taking out a site for making yellow cake, the raw material that can be turned into enriched uranium. But Iran still likely has centrifuges and a site deep underground where it may be able to enrich uranium, experts say. Crucially, it held on to its stockpile of nearly 1,000 pounds of near weapons-grade uranium, half of it buried in caskets in a tunnel deep under the Isfahan nuclear site, the United Nations Atomic Energy said. Iran is not going to trade those away easily. Its demands are going to be higher than they were during talks in February for surrendering the material, said Eric Brewer, a former White House official who worked on Iran during the first Trump administration. President Trump weighed a military operation to seize Iran's stockpile of enriched uranium during recent weeks of fighting, the Wall Street Journal has reported. But such an operation would be complex and dangerous. For now, U.S. officials have said Tehran isn't enriching uranium and that the fissile material is being monitored by satellite. U.S. and UN Atomic Agency officials have said there is no sign the highly enriched uranium has been moved since June's U.S. and Israeli attacks. If the U.S. does seek a deal, it will have to find a way to address Iran's nuclear threat. More taxpayers bet the IRS isn't going to catch me. The Internal Revenue Service shed thousands of enforcement employees, and some taxpayers appear eager to cheat. By Richard Rubin. Washington. The Trump administration is scaling back tax enforcement, leaving fewer federal employees to audit returns, collect unpaid tax debts, and deter Americans from shirking the law. The Internal Revenue Service has shed thousands of enforcement workers since President Trump returned to office, and his fiscal 2027 budget proposal seeks further cuts amid the administration's broader pullback of white-collar law enforcement. The IRS enforcement workforce would fall below 30,000, fewer than at the end of Trump's first term, and about a third less than the Biden-era peak. The retrenchment is spurring a vibe shift across the tax landscape ahead of the April 15th deadline, and lawyers say they see more taxpayers and tax shelter promoters eager to cut corners or cheat. Even without the proposed cut for next year, inflation-adjusted spending on tax enforcement is already the lowest in at least 20 years, according to the Progressive Center on Budget and Policy Priorities. The cutbacks will be costly for the government's bottom line and expand budget deficits. The administration's own IRS budget document acknowledges that chasing scofflaws generates more money than it costs. Reductions in enforcement spending create missed opportunities and lost revenue for the United States, the document said. The IRS workforce reductions so far would cut an estimated $46 billion in federal spending over the next decade and reduce revenue collections by $643 billion, according to the Budget Lab at Yale. AI demand outstrips computing capacity. There's a massive capacity crunch that's unlike anything I've seen. By Angel Al-Jung and Robbie Wayland. The artificial intelligence gold rush is rapidly drying up the supply of the one resource that AI developers can't do without: computing power. The sharp capacity crunch has caused consternation among power users, forced companies to scuttle products, and led to reliability problems. The issues are a warning sign for the AI boom, as they may limit the utility of powerful new AI tools, just as massive amounts of users have begun to rely on them to boost productivity. Over the past few months, demand has exploded for agentic AI, autonomous tools that use the technology to independently perform tasks, from writing software code to scheduling house tours for real estate brokers. Companies have been scrambling to secure the availability of computing capacity needed to serve a growing base of customers who are also significantly increasing their AI use. Everyone's talking about oil, but I think what the world is mainly short of is tokens, said Ben Palladian, an engineer and tech investor based in Los Angeles. A token is a unit of measure in AI to track how much computing resources are being used for a task. AI is at this point no longer just some chatbot that we ask for a recipe while we stand in front of the fridge. It's orchestrating tasks. It's getting smarter, Palladian said. All of it points to a classic problem that has popped up in technology booms throughout history, from the 19th century railroad expansion to the telecom and internet explosion of the early 2000s. Demand is growing far faster than companies are able to access resources and build out infrastructure. Historically, price increases have been among the only ways to address a supply crunch, but such a move could be perilous for frontier AI companies which are in a ferocious competition to gain users. Hourly rental prices for GPUs, the microchips used to train and run AI models, have surged since the fall. Anthropic, the maker of popular chatbot Claude and viral coding app Claude Code, has been plagued recently by frequent outages. The company has begun metering computing supply to users during peak hours, but the rollout has been marred by customers who have complained that they are reaching the limit far too quickly. OpenAI scrapped its Sora video generation app in part to free up computing resources to power coding and enterprise products that would work on a new AI model, code name Spud, the Wall Street Journal reported. Token use in OpenAI's API, a platform where mostly enterprise users access its software, rose from 6 billion a minute in October to 15 billion a minute in late March. Fantastic Four. Rory McIlroy won his sixth major, finishing 12 under par. He joins Jack Nicklaus, Nick Faldo, and Tiger Woods as the only players with consecutive wins at the event. The 36-year-old from Northern Ireland became just the fourth man to successfully defend his title at Augusta National. Now for other articles within the paper. Fuel shock boost EVs after domestic slump, by Christopher Otts and Patrick George. Skyrocketing gas prices cemented Eric Janey's decision in March to go electric for good. The information technology worker in Aliquippa, Pennsylvania, bought a lightly used Kia EV6 after trying the same vehicle on a cheap lease for the past couple of years. Knowing that we can go out and do what we need to do at any time and not have to worry about how much we're going to be able to put fuel in the tank has been incredibly beneficial, said Janey, 43 years old. Car shopping platforms such as Cars.com and Edmunds say they have seen an uptick in EV interest as Americans adjust to life with gasoline over $4 a gallon, while auto executives say a renewed focus on fuel efficiency could mark the bottom of the EV meltdown. Edmunds said shopper consideration of EVs on its website has risen nearly to what it was before tax incentives ended last year. Iran fleet holds Hormuz despite blows, by Benoit Falcon. The U.S. has destroyed most of Iran's navy, but not the one Tehran uses to control the Strait of Hormuz. The regular navy operated Iran's big battleships largely for prestige and occasional long-range deployments. The paramilitary Islamic Revolutionary Guard Corps, on the other hand, has its own extensive fleet of more nimble boats designed to control the crucial waterway with missiles, mines, and harassment of commercial ships, and they are much harder to reach. Farzan Nadimi, an Iran-focused senior fellow with the Washington Institute, a U.S.-based think tank, said more than 60% of the Revolutionary Guard's fast attack craft and speedboat fleet remains intact. They continue to pose a threat. You are listening to a reading of articles and features from the Wall Street Journal on the Niagara Frontier Radio Reading Service. From the editorial page, Trump blockades the blockaders in Iran. The regime made its nuclear intentions clear in 21-hour negotiations. We're a long way from Tuesday night's declaration of victory over Iran, and the good news is President Trump seems to know it. On Saturday, the U.S. team left foundry negotiations in Pakistan, and on Sunday, Mr. Trump announced a naval blockade of the Strait of Hormuz for ships using Iranian ports. Iran has denied passage to most oil and gas tankers, and now the regime will get the same treatment. Iran's failure to come to terms was predictable. Tehran took Mr. Trump's eagerness for a ceasefire as a sign of desperation and confirmation that its energy strategy is a winner. The regime won't even open the strait amid the ceasefire, so there was little reason to think its leaders would abandon their decades-long nuclear objectives and ideological core. As Vice President J.D. Vance explained after marathon talks failed, we need to see an affirmative commitment that they will not seek a nuclear weapon and they will not seek the tools that would enable them to quickly achieve a nuclear weapon. The latter half is the key. No matter what Iran's regime says, the only reason it needs domestic uranium enrichment capability is to pursue a bomb. Mr. Trump summed up the talks on Sunday. There is only one thing that matters, he wrote on Truth Social. Iran is unwilling to give up its nuclear ambitions. The regime says the U.S. is asking too much, but Mr. Trump is right to stick to his terms on dismantling Iran's nuclear program. During negotiations for Barack Obama's 2015 nuclear deal, Iranian Foreign Minister Javad Zarif walked out, and U.S. Secretary of State John Kerry ran after him. This dynamic was one reason the deal allowed enrichment, sunset its restrictions, and let Iran keep the infrastructure to reach weapons grade when the regime wanted. By walking away, Mr. Trump tells the regime not to expect a repeat. By having the more dovish Mr. Vance execute the walkout, the president also signals that Iran won't be able to exploit divisions in his administration. The regime complained about previous U.S. envoys and asked for Mr. Vance, but its real problem is Mr. Trump, the U.S. president who called Iran's bluff. We raised the blockade option in Saturday's paper, and it makes sense as long as Mr. Trump is willing to accept the energy market pain. Iran will not be allowed to profit off this illegal act of extortion, the president wrote Sunday. Why should Iran alone be exempt from the cost of its illegal actions in Hormuz, raking in revenue while it starves the rest of the world? Even as the U.S. sought to pressure the regime, it was undercutting itself by encouraging Iranian oil exports. Iran now has an incentive to restore traffic in the strait, as does China, whose tankers had been given priority. Rather than smuggle new air defenses to Iran, as U.S. intelligence suggests it is doing, let Beijing pressure the regime to resume oil shipments. Mr. Trump says the Navy will even seize tankers that have paid a toll to make it out of the Gulf. Another blow to China if the U.S. can execute it. With the help of allies, the president added, the Navy will also demine the strait. Important preparation for the ultimate goal of reopening Hormuz to all. Iran's regime will have to take that threat more seriously. The regime will also have to consider anew the possibility of U.S. airstrikes to destroy its oil export infrastructure at Karg Island. This was unlikely while U.S. policy was to keep Iran's oil flowing. Now it seems possible, especially if Mr. Trump finds the blockade too slow-moving a policy tool. Over weeks and months, a blockade would strangle the regime's revenue, but the president may want results at the negotiating table sooner. Any reduction in energy flows, even from the trickle Iran was allowing, will be felt by markets and U.S. allies, especially in Asia. Oil prices will spike if the blockade is enforced at any length. The president presumably knows this. He's telling Iran's leaders they nonetheless won't win by playing the clock. Iran promised to open the Strait of Hormuz, and they knowingly failed to do so, Mr. Trump wrote Sunday. He was played to get the ceasefire, and if oil won't flow, there's no reason to ease pressure on the regime. Oil exports are a better target than Mr. Trump's misguided threats last week to destroy Iranian civilization or all of its power plants. As the president said in his first term, the U.S. shouldn't start a war it doesn't intend to win. His challenge now is to prove to Iran's regime he meant what he said. From the opinion pages. Why AI is like a gold mine. Some tech stocks pay off eventually, but only after a long period of volatility. By Andy Kessler. When I started on Wall Street, a veteran pulled me aside. Tech stocks are just like Vancouver gold mining stocks. You buy them when the price to earnings multiple is high, even infinite, and sell them when the price to earnings is low. Huh? Newly discovered gold mines, he explained, go public, attracting speculative investors. The miners spend a fortune on equipment, causing stocks to collapse, since the mine makes very little profit early on. But even as profits increase, price to earning multiples shrink as mines get closer to extracting all the gold. I was skeptical about a gold and technology connection. Gold is a shiny metal pulled out of the dirt. Chips and software and networking are manifestations from the infinite power of the human mind. There is no way they're the same. Many roller coaster stock rides later, I realized how right he was. We've seen it with personal computers, networking, .com, mobile, software as a service, electric vehicles. Rivian stock hit $179 in 2021 It's now $15, and now artificial intelligence. A hype cycle with massive speculation is followed by a sell off as the hype fades and reality sets in. Then the winners who really do successfully mine the gold or technology emerge, and their stocks meet or beat their previous peaks. And here we are. Investor Bill Ackman said recently that great businesses are trading at extremely cheap prices. Design software company Figma's stock went from a post IPO $115 to $18 today on fear of AI tools. Will AI kill software companies? Winners will adapt and regain their peak values. Others are toast. Before the Iran fireworks, software and some AI beneficiaries had already been selling off. From their all-time highs, Microsoft is down 33%, Meta 21%, Oracle 60%, ServiceNow 64%, even after last week's ceasefire relief rally. AI star NVIDIA is down 11% from its high in October, despite announcing a blowout quarter in February and projecting high growth into next year. Earnings up, stocks down as price to earnings multiples contract, gold mining like. Today, lots of moving parts affect the market. Tariffs, oil moving slowly from the wrong side of the Strait of Hormuz, concerns about AI squashing software company earnings turning into a run on private credit funds lending to software firms. There are plenty of signs that the gild is coming off the lily of the most robust AI forecast. Memory prices were flying. In October, OpenAI announced a non-binding $71 billion commitment for Korean memory chips, a big chunk of global supply. Wow. But financing for its $500 billion Stargate venture with Oracle appears to be in limbo. Memory maker Micron stock was down 32% from its March peak before bouncing back. There's gold in them dar hills, but maybe not as much as speculators speculated. Last year's IPO market totaled $170 billion, down big from 2021's almost $600 billion. Still, demand for golden AI shares is so strong that outside a nasty recession, the possible $1 trillion IPOs of OpenAI, Anthropic, and SpaceX should proceed. Remember, eBay went public in September 1998 during the long-term capital management stock market mess? Expectations are high. The journal reports that internal documents project OpenAI's 2030 revenue to approach $300 billion. Be wary of forecast. A lot of technology and competition can change by then. SpaceX's Starlink satellite internet access business is reportedly profitable, but Elon Musk merged SpaceX with X, Twitter, and XAI foundation models. The combination is, like OpenAI and Anthropic, likely losing boatloads of money. Yes, we're in the early innings of the AI rollout cycle, but with gold mine valuations for anything in the space, including those that put AI after the company name, similar to .com in the late 90s. Remember Sun Microsystems' catchphrase, "We put the dot in .com"? Do you remember Sun Microsystems? Oracle bought it in 2010. I worry because the entire AI architecture is in flux. On March 24th, Google announced a turbo quant compression algorithm that reduces memory use in AI models by a factor of 6. Its Tensor chips are a real competitor to NVIDIA's GPUs. Amazon has custom AI chips, and I've lost track of the number of specialized inference chips being designed to answer our AI prompts at much lower cost than NVIDIA chips. Nothing is set in stone. Technology surprises seem to hit every day. Eventually, your smartphone will do standalone AI. Meanwhile, open AI projections for data center spending suggest the company may run losses of almost $250 billion through 2029. That's a big nut to finance. Management in turmoil doesn't help. Change is rapid. All profit assumptions are subject to the delete key, so be careful about overpaying for the future. AI gold is real, but heed that Wall Street vet's advice. AI values may be as volatile as gold mining stocks. You are listening to a reading of articles and features from the Wall Street Journal on the Niagara Frontier Radio Reading Service. The Iran war is a boon for the petrodollar. America strikes back against China's patient challenge to the U.S. currency's supremacy. By Diana Chaliva. A Deutsche Bank report making the rounds argues the Iran war represents a perfect storm for the petrodollar, the primary currency in which oil is bought and sold. The report says that U.S. military entanglement in the Gulf, the weaponization of the Strait of Hormuz, and reports that Tehran is granting passage in exchange for yuan-dominated payments adds up to a historic blow to dollar dominance. The argument is superficially compelling. It is also exactly backward. Start with the threat to the petrodollar before this conflict began. China had spent years methodically building the infrastructure to supplant dollar dominance in oil trade. Yuan settlement corridors, the M-Bridge platform, which allows financial institutions to bypass dollar rails and move digital currencies across borders, and deepening financial and technological ties with Gulf producers. Beijing's ambition wasn't a dramatic overnight coup. It was patient structural erosion. Shift enough oil settlement into yuan, recycle enough petrodollar surpluses into Chinese assets, and the architecture of dollar dominance quietly hollows out. The petrodollar system, born from the 1974 Security for Oil pricing bargain between the U.S. and Saudi Arabia, rests on three pillars: oil priced in dollars, transactions settled in dollars, and oil revenue recycled into dollar-dominated assets. Because oil is so central to global manufacturing and transport, paying for it in dollars creates a gravitational pull that dollarizes trade, saving, and reserves across the global economy. undermine that dollar-based oil trade, and the whole edifice begins to shift. Washington has noticed. Gulf states, led by Saudi Arabia, supported the U.S. campaign against Iran and have so far viewed American military performance favorably for the most part. Whatever one thinks of the conduct of the war, one thing is clear. When the security commitment was tested, it held. Then look to the Western Hemisphere, where the removal of Nicolas Maduro and the reassertion of American influence over Venezuelan oil reserves is the other jaw of the same strategic vice. If the U.S. came to control Western Hemisphere oil directly or by proxy, it would command reserves exceeding all of the Organization of the Petroleum exporting countries combined. Washington is positioning itself and its sphere of influence on the oil order's dominant supplier, with all the currency leverage that entails. The U.S. no longer needs Gulf oil for itself thanks to the shale revolution, but it needs the world to keep paying for oil in dollars. These moves are how you defend that arrangement. The strategic oil logic illuminates how the war is likely to end, and the options are starker than most commentators acknowledge. The more benign outcome is a Venezuelan-style arrangement. A severely weakened Iranian state enters a de facto accommodation with the U.S. Washington gains influence over Iranian oil flows without the cost of occupation, and unimpeded dollar-denominated traffic through the Strait of Hormuz is restored. Plausible, but it requires a coherent Iranian interlocutor capable of delivering a durable agreement. That is the problem. Sustained military pressure has significantly weakened the Iranian regime. Combined with President Trump's ultimatum and China's push for a resolution, it has brought Tehran to the negotiating table, but whether Iran's current leadership is capable of delivering a durable agreement is uncertain. This raises the probability of the harder outcome. U.S. forces take and hold Karg Island, Iran's primary oil export terminal, and establish a permanent presence to police the Strait of Hormuz. This approach would be brutal in execution and expensive to sustain, but unambiguous in strategic effect. Control the choke point through which a fifth of the world's oil flows, and you control the conversation about what currency pays for it. China will be watching all this with considerable frustration. Beijing spent years building the scaffolding for a petro-yuan system at enormous diplomatic and financial cost. It was a real and growing challenge to dollar dominance. The Iran conflict has injected American strategic intent back into the equation. The petrodollar has two legs, the petro and the dollar. China was making progress on both. For now, the U.S. is pushing back hard in the Gulf, in Caracas, and at the Strait of Hormuz. The dollar's long-term fate will ultimately depend on whether Washington sustains this strategy and on whether the global energy transition eventually makes the contest moot. Neither outcome is certain, but those who conclude that the petrodollar is already in its death throes are reading the map upside down. The storm is real. The dollar is fighting back. Letters to the editor, the topic, Trump's ceasefire isn't a victory for the U.S. President Trump's 2 week ceasefire with Iran isn't a breakthrough. It is a strategic humiliation. The problem isn't merely that he moved a supposedly final deadline. The deeper problem is that he appears to have shifted from enforcing American terms to negotiating on Iranian terms. Mr. Trump publicly demanded complete, immediate reopening of the Strait of Hormuz or devastating consequences. Yet Hormuz still isn't truly open, and Iran is still using it as leverage while trying to force concessions over Hezbollah and Lebanon. That isn't victory. That isn't compliance. It is the conversion of an American ultimatum into an Iranian framework. The one possible redeeming point would have been unconditional free navigation through the Strait of Hormuz. But Iran is already signaling something else: regulated passage under the coordination of its armed forces. In other words, after all the threats, all the deadlines, and all the military buildup, Tehran still expects to emerge with a privileged chokehold over the waterway it used as leverage in the first place. A superpower can't issue ultimatums, threaten civilizational destruction, then settle for a pause built around the adversary's demands. That isn't deterrence. It is a public lesson in how American leverage can be squandered. From Igor Mertz, Royal Oak, Michigan. Same topic. Your editorial misreads Mr. Trump's real goal, which is to finish the job. Iran's 10-point plan provided Mr. Trump with an off-ramp. Now bombing can resume if Iran breaches the ceasefire or is found to not be negotiating in good faith. Iran also made the predictable mistake of submitting an unreasonable plan, including giving Iran control of the Strait of Hormuz, which even many of Mr. Trump's strongest critics find unacceptable. Napoleon reportedly said, "Never interrupt your enemy when he is making a mistake." Perhaps Mr. Trump's strategy is to give Iran enough rope for the world to recognize that successful negotiation can only be achieved when Iran is further weakened by additional bombing. From Raymond J. Termini, Dallas. You've been listening to a reading of articles from the April 13th, 2026 issue of the Wall Street Journal. We read from the Wall Street Journal every Monday through Thursday at 11 p.m. Your reader has been Corrine. Thank you for listening.